Welcome to Quiet Minds, Rich Lives. I'm your host, Michael. I'm a financial coach with lived experiences on mental health challenges, especially when it's intersecting with finances and wealth. I hope my clients start building a future they want with actions taken today. I strongly believe these two things create more wealth, worth, and wellness from within themselves. If you find yourself stuck in a shame spiral, feeling judged by others or even yourself, even after all the financial work, then this podcast is for you. Each week, we're going to talk about various subjects regarding mental health and finances because I strongly believe they play off of each other and shouldn't be treated separately. When you get your finances in order, I strongly believe it eliminates stress that causes you to spiral into behavior that are immensely unhealthy for yourself and possibly loved ones around you. So let's dive in. All right, today we're going to talk about something that brings up a lot of stress, confusion, and honestly, shame for a lot of people. It's your credit score. Now, I want to start by saying this clearly. Your credit score is not a reflection of your worth as a person. It's a number, it's a tool. And like any tool, it can be learned, improved, and used to your advantage. But I also know because I've lived it and I've coached people through it that when your credit is low, it doesn't feel like just a number. It feels like a judgment, like doors are closing, like you've messed something up permanently. So today we're going to break this down in a way that removes that confusion, removes some of the emotional weight, and gives you clarity. We're going to cover you three main things: what a credit score actually is, what affects it, and why it matters in your real life. And by the end, I want you to feel less overwhelmed and more in control. So, what is a credit score? It's simply put this way: a credit score is a number that represents how likely you are to repay borrowed money. That's it. It's not measuring your intelligence. It's not measuring your discipline as a human being. It's measuring risk, specifically how risky lenders think it is to lend you money. Most credit scores in the US range from 300 to 850. The most commonly used model is the FICO score. According to FICO, here's how the ranges generally break down. 800 and above is exceptional. About 740 to 799 is very good. About 670 to 739 is good. 580 to 669 is considered fair, and anything below that 580 just means poor. Now, here's something important: there isn't just one credit score. You actually have multiple scores depending on the scoring model, such as FICO or the Vantage score, and then the credit bureau, such as Experian, Equifax, and TransUnion. But don't get stuck in that detail. For most people, the general range is what matters. So, what affects your credit score? Now, let's get into some part that people either overcomplicate or they completely misunderstand. Your credit score is made up of five main factors, and I'm going to explain these in a very real life way. So, number one is your payment history. This is 35%. This is the biggest factor. It simply answers: do you pay your bills on time? Late payments, missed payments, collections, these all hurt your score. And according to Experian, even one payment that's 30 days late can significantly impact your score, especially if you have good credit before. But here's the important mental health piece: life happens. People miss payments because they lost a job, they were overwhelmed, they avoided looking at their finances, they were dealing with depression or anxiety. And then what happens? Shame kicks in. Instead of fixing it, they avoid it even more. So if that's you or has been you, this is not about beating yourself up. This is about understanding consistency matters more than perfection. The second thing is credit utilization. This is 30%. This one trips up a lot of people. It's how much of your available credit you're using. For example, if you have a credit card with $1,000 limit and you're using $500 of it, your utilization is 50%. Experts generally recommend keeping this below 30% and ideally below 10% for the best scores. But here's the key mindset shift: your credit is not bad. Maxing it out and staying there, that's what hurts you. Credit is a tool. The goal is to use it in a controlled way. Length of your credit history. This one is 15%. This is how long you've had credit accounts opened. The longer your history, the better it looks to lenders. This is why people sometimes see their score drop when they close an old credit card. It's not because they did something wrong. It's just that they shortened their history. And then number four is your credit mix. This allows for 10%. This looks at types of credit you have, such as credit cards, auto loans, mortgages, student loans. Having a mix can help your score, but this is a small factor. Don't go opening accounts just to improve your mix. That's not a smart move, in my opinion. And then the last thing is new credit. This one also accounts for 10%. This includes hard inquiries, such as when you apply for credit or opening new accounts. Applying for a lot of credit in a short time can signal risk, but one or two inquiries, that's normal. That's life. Now, let's talk about why this actually matters in your day to day life, because this is where it becomes real. One is interest rates. Credit score directly affects how much you pay to borrow money. For example, someone with excellent credit might get a mortgage rate significantly lower than someone with poor credit. And over time, that difference can cost or save you tens of thousands of dollars. The Federal Reserve has consistently shown that higher credit scores are associated with lower interest rates across lending products. The second thing is approval odds. Your score affects whether you get approved at all. This applies to credit cards, car loans, apartments, mortgages, and getting an eye can feel, well, personal. But again, it's not personal. It's a system evaluating risk. Number three would be insurance and housing. A lot of people don't realize this, but in many states, insurance companies use credit based insurance scores to determine premiums. Landlords may also check your credit before approving your rent application, so your credit score can affect where you live and how much you pay. Then, number four is mental and emotional impact. This is the part that doesn't get talked about enough. Credit score can create anxiety, trigger avoidance behaviors, cause shame, impact your confidence. And here's what I see often in coaching: people avoid checking their credit because they're afraid of what they'll see, but avoidance keeps you stuck. Clarity, even if it's uncomfortable, is what gives you power. Let's pause for a moment. If your credit score isn't where you want it to be, I want you to hear this. Your credit score is a snapshot of past behavior, not a life sentence. It can change. And I've seen people go from low 500s to the 700s, not overnight, not perfectly, but consistently. Let's make this practical. If you're feeling overwhelmed, start here. Pay your bills on time, even if it's just a minimum. Consistency builds momentum. Lower your credit utilization. Even small payments throughout the month can help. Avoid opening too many accounts at once. Check your credit report for errors. You're entitled to free reports at annualcreditreport.com. Set up autopay or reminders to reduce mental load. According to the Consumer Financial Protection Bureau, regularly check your credit score. Making on-time payments are two of the most effective ways to improve your score. Let me give you a simple example. Let's say someone has a credit card with $1,000 limit. They're using $900. They miss a couple of payments. Their score is likely struggling. Now imagine they pay the balance down to $300 and start making on-time payments for 3 to 6 months. That alone can create noticeable improvement, but not perfection. It's progress. Your credit score is not something to fear. It's something to understand, because when you understand it, you can use it. And when you use it intentionally, it becomes a tool, not a source of stress. So thank you so much for joining us today for this episode of Quiet Minds, Rich Lives. If today's conversation sparked something in you, I'd love to hear about it. Feel free to send me a message on social media. I'm at Quiet Minds FC on both Facebook and Instagram. If you'd like to sit down and have a coaching session with me, I offer free consultations at quietmindsfc.com. If you don't want to miss any future episodes, please leave me a follow, a rating, and a review. It helps more people find us here. Until next time, make your mind quiet and your life rich. Remember, your story isn't set in stone. You have the power to change it.